which is a preview for next week's events. Two big events next week, NFP and the ECB, but we have as usual, slower start on Monday. Australian retail sales, the week beginning on Monday, March 6th. Then we have Australian rate decision, so a strong start for the Aussie. No changes expected from the RBA. We had some weak figures like CAPEX, but we had the strong GDP number. All in all, things look quite optimistic and balanced. No reason to raise rates, no reason to cut them anytime soon. On Tuesday, we also have the US and Canadian trade balance and the Kiwi milk auction, the GDT price index. On Wednesday, things become more interesting with the Chinese trade balance. Remember, the bottom line does not matter. What matters is top line, level of exports and level of imports. That reflects economic activity, not only for China, but for all the world. China is the world's #2 economy. We have the UK budget coming out on Wednesday. I really don't know what to expect, but well, we'll learn soon enough. Politics, once again, is more important also in the UK. The type of Brexit negotiations are more important. US ADP non-farm payrolls, big hint towards the NFP on Friday. After we already had the time, we'll have the time to digest the ISM figures. We've seen that in recent months, ADP has been better, and there has been a better correlation between the private sector figures from ADP and the actual official government non-farm payrolls. On Thursday, big event, the ECB. We talked about that. Draghi will probably want to depress the euro, but we'll have to acknowledge the rising levels of inflation, higher growth, and dropping unemployment. So it'll be a fine balancing act. Master Draghi knows how to drag down the euro, but usually he's successful, but sometimes he had his share of failures. So let's see, it'll certainly be an interesting event. Join live coverage. Also, Chinese inflation should be watched out for, and US jobless claims as usual. And Friday, March 10th, probably the latest NFP that I've seen in quite some time, maybe because February was short. In any case, we have a warm-up with UK manufacturing output, and we also have the Canadian jobs report, but US non-farm payrolls matter most, and I can say with a high level of confidence that wages are much more important than the headline gain in jobs. If we have wage rises closer to 3%, we can say, okay, we're going to have a rate hike in March. We're going to have 3 hikes in 2016, even 4. And if we're not going to have, if we're going to have 2.5% or lower, then there will be doubts and the dollar could fall. We'll be here next week to preview that in much more detail. We'll also have other figures by then. Anyway, 2 big events, €4 our special segment today. So we have the ECB on Thursday and the NFP on Friday. The rest of the week will be high tension in euro-dollar towards this event. So that's a preview for the events of March 6th to March 10th. Some comments here from Jax about Trump. He is learning on the job. Yeah, steep learning curve. Certainly, Ed says Trump said USD was expensive. Yeah, he talked about other countries doing a competitive devaluation, singling out Japan, which was surprising. I mean, China is, of course, the punching bag of many American politicians, and also Trump's saying China, but also Japan joined the ranks of the devaluation. His economic advisor Navarro talked about Germany doing that as well. We didn't hear that kind of rhetoric in his recent speeches, and we didn't hear anything like that from Mnuchin, his new Treasury Secretary. So things are calmer in that front. For the Fed, a stronger dollar means lower inflation and means less urge to raise rates. Okay, hope that answers your comment. Yeah, so I guess it's time to wrap up the show.
Welcome to a market to end all markets. Welcome to FxPro.